Hello everyone, this is Evan here from the Trade Risk on Friday, October 6th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. We're going to jump right into the charts here with the S&P 500, with the SPY ETF, and you can see we finally had a red close, just marginally 29 cents down on Friday, but still finishing up strongly on the week. Here's the weekly chart, up 3.14 points here in the SPY. That's good for 1.25%, really extending this rally higher. Last week, arguably here on Friday, breaking out above to new highs here above this 250 resistance, which was resistance back here on the 12th, early September. And you can see we just had a nice strong follow through to the upside. And if we look at this weekly chart, just look at these moving averages here, you can see extending itself away from the 8-period moving average. Now, note over the past year or so on this chart, you don't see the SPY get too overextended or too pushed away from this fast moving average, this blue line on my chart. It does like to sort of retract back here and consolidate after pushing far away. Maybe we're getting to that limit now, but again, it's not a short signal or a timing signal in itself. It really just helps give you some context to know where we are in the scope of this trend. So the weekly chart trend remains strong. That hasn't changed. Momentum still is actually picking up steam throughout the course of this week. If we go back to the daily chart, this day here, Thursday, in fact, we actually pushed all the way out of the upper Bollinger Band, the standard 2 and 20 Bollinger Band here on the daily chart. I'm not sure what it looks like here on Friday, probably slightly above it still, or getting close to the that upper band. So when we look at everything here, again, trend remains strong, momentum still building. You had a little bit of higher volume come in here on Friday as we stalled out and just had this inside day. So I think coming into next week, early on Monday, be interesting, of course, to see how this inside day resolves itself. In those active traders, day traders will be watching that range there to see if we can get some movement and expansion outside of Friday's range. But largely, we continue to remain in a strong trend. Momentum continues to be strong. We are stretched. We are, quote, overbought, whatever, different metric you want to use. Again, not a timing signal. In fact, the overbought probably is more of a buy signal at this point, especially in 2017, than it is anything else. But like we say, it's at least context to know where we stand in this trend. Last Friday, I was basically saying the same thing, where, trend is strong, momentum is strong, but I think it's best to be selective. I still think it's best to be selective here. Now, selective probably cost opportunity this week to not have as much exposure in this market as it continues to move higher. That's fine. That's a part of a process, which of course is now sort of getting into the individual realm of everyone's strategy and process, which we certainly can't cover in the scope of this video. But for me, I continue to remain selective in this market, letting some winners continue to push higher, but still keeping some cash on hand and not being all in here, because I am waiting for some more consolidation, some more reset in some of these leaders that really marched the S&P 500 and this market higher. When we start to get into those sectors, we'll talk about them. They really haven't changed from the last couple of videos, and some have cooled off and started to consolidate. We'll point those out later in this video. Others continue to remain pretty stretched and moving to the upside. So that's the S&P 500 trend, still strong here. Really difficult to fight this, but we should still be aware of the ground that we've covered and just understand where you are in context of this trend. That would be my advice there. If we look at the IWM, you can kind of see some slowing down here, some consolidation for the past 4 days of this week. We had this nice move higher out of the gate on Monday, and then we basically went sideways here for 4 sessions. This is the type, that is sort of the action I'm looking for. More of a reset here, more just to let these moving averages catch up, let price action sort of catch up, let those profit takers, week-long sort of reduce some of their positions there. Maybe a little bit of a shakeout would be healthy. Quick knee jerk back down to this 145 area. That I think it would be very welcoming and constructive in the long term, and again would set us up nicely for perhaps a year-end rally. That's my wish list. It doesn't have to happen. We can continue to grind higher here and really let this market chase. The buyers really have to pay up and chase this market if they want to get involved. That might be the pain trade at this point. I'm not sure. But the IWM anyway, seeing progress this week, closing near the highs, but some digestion, and that is welcomed. The NASDAQ 100. So this is a index here that I'm very familiar with, as we had a short trade in this, which turned out to be a complete loser here. We jumped on this short trade Wednesday of last week, this 27th here, right as we started to rally up into this 145 level, into some of this previous supply in here, into some of these moving averages, looking for a potential lower high scenario with a stop around 146 or so. And you can see what happened here all week, basically just pushed itself higher, had a little bit of a stutter step here on Tuesday through Wednesday, looking like, well, maybe this could start to roll here, but in fact, Thursday was sort of the nail in certainly my short, which was enough to get me out of this trade for a loss in the NASDAQ 100 as it broke out to new highs on Thursday. So if we look at the weekly chart here, perhaps this is just one great looking consolidation and now a continuation pattern over the past 4 or 5 weeks. Again, the trend still remains strong here in the NASDAQ 100 overall. Getting certainly a little sluggish in here since June. We've pointed this out. This has been the concern for me in two parts: the volume pattern here with all of these sort of distribution days and not getting a whole lot of progress since June, and secondary, the lack of new highs here as the Russell 2000 and SPY broke out to new highs late last week. The Qs didn't. Now the Qs are back at the party. So if we start to see some rotation into here, this could keep the market going. This could keep the rotation game going, and this trend will continue to extend itself. Now, one thing I am looking at here is this 146.50 level, these prior highs here from September, which we just broke out of on Thursday. If we saw some type of very quick rug pull early next week and we saw a fast rejection on some volume back below this level, that would interest me back onto the short side as a potential false breakout. I don't want to be stubborn here. I'm not looking to fight this trend at all. If this continues or even just move sideways here, this will not have my attention on the short side. But if we saw some type of abrupt move back down on significant volume or on a slight increase in volume there, I would be interested in potentially putting a short back on with a stop above these highs. Once again, I don't want to be too cute here, but I think it's at an interesting spot, and I still want to respect some of these breadcrumbs that we see here through volume, through the lack of new highs. Of course, again, a new high printed today, but if that were to be suddenly rejected, that would be sort of the other sort of factor that I'd be looking at. So that's the Qs. That is the trade update there. Nice loser and a market environment summary overall. So one other sort of point out there is the VIX. And again, I don't want to harp on this at all, but we do see, once again, the VIX trying to actually move higher today, faded off those highs here on Friday, up 5%. You can see on the week, up 1.5%. So you can see SPY was up. We basically had good market gains all around, and we had the VIX kind of hanging in there. So I don't know if this is a trade idea or signal in itself. I'm certainly not implying that, but something to keep interesting, that volatility getting, staying a little bit bid here and maybe finally starting to get a little more uncomfortable holding below 9.5 or even 10. Again, we need to see follow through. We need to see some actual event and some more higher, lower consistency get put in here, but something to at least note here on Friday's session. So Let's get into some other markets. We'll go to TLT next, which had a pretty tough week, down 1%, continuing this drip lower here. 8 and 20 period moving average, bearishly aligned. It's above price. This looks like a pretty tough spot to be in for the bulls. The only sort of line in the sand here, this 122 level, which was a pretty important inflection area back here earlier in the year. Maybe that holds on once again like it did in July and August, but still I would not be so interested in trying to jump in front of this right now. Let's see if we can get a more meaningful reversal or sideways structure here before looking to play for that dip. Next, if we go to gold, I think is actually interesting here on Friday. Had a nice outside reversal. You can see we got all the way below 120 to the 119.80 or so, and then we reversed, moved green, and closed strongly near the highs from Thursday. So maybe this sell-off that it's been in for the past multiple weeks is about ready to halt around this zone in here. That would be pretty interesting. Slightly higher volume. Certainly I was hoping that we would see this more around 123 or so to have a more shallow pullback, which would set us up for a slightly more constructive sort of pullback buy. This is fairly deep. However, something to pay attention to, especially if you're tactical. Look for some follow through here tomorrow on Monday and see if we get that move higher. Of course, the fast moving averages here are certainly not aligned in our favor if we're looking to play on the long side, but for you tactical traders, maybe this is a spot to start to pay attention to. And silver, arguably even louder in this reversal, had a wide range, strong volume today, all the way down to 1540 or so. Then that reversal moved to green and then closing well above Thursday's highs. So once again here, pay attention to these metals, look for that follow through. Maybe this pullback has run its course and we're going to see some type of higher low here or structure to bring us back towards the highs from September, August. So pay attention to GLD and silver. We do have some exposure there ourselves, not directly in the commodities, but with some of the miners that are holding up a little bit better. So gold, silver, interesting developments there on Friday. USO, I also think pretty interesting developments, this time on the bearish side, on the sell side. I don't like this thrust back below 1030. Whenever we move above a pretty significant price structure or prior significant pivot, like these August highs here, as we moved above them late last week, that's always interesting. But if we fail to hold on to those highs, if we reject quickly, that is something that is notable. That is something that is considered to be a bearish development in my book, and that's something I want to be careful of. So for you active, nimble traders as well, look for some continued weakness here on the downside. Maybe that gets some more legs. Maybe we come all the way back to 950 here. But the constructive action that I had late last week as we started to break above these highs has certainly neutralized and probably is more pessimistic at this point, so long as we are below this 1030 level. And natural gas now continuing pretty much the same footstep here, continued bearish developments. This slide lower is continuing now. We're basically at or making new closing lows here on the year. So natural gas in a real tough spot. It looks like sellers could really start to unravel this and push this lower here as well. Need a fast recovery in natural gas. This base that we moved sideways and then we had this nice pop up here, it was very constructive on it. That failed, got more neutral on it, and now if this continues to move lower here to new highs on the year, there's not much to like here on natural gas bullish perspective. So that's natural gas. Those are some of the commodities. I think that covers pretty much everything. Let's look at some sectors here. And, I'm not going to go too much. There's a lot that is working. I think this week IBB was a good trade to the upside, up 2% here. Look at that weekly chart. Very, very clean action after consolidating for about 3 or 4 weeks now. And you can see here, this is something where I would consider this, a sector that you could be participating in on the long side. You had this digestion. It was not as extended as some of those other sectors of the market, and this had still a good trend in place. tight consolidation. This was wound up for a move higher, and we got it. So stalling out a bit here at the end of the week, but you could see made a nice move. XLV, basically similar situation here, had a bigger pullback off of its highs. We talked about our trade entry here on Friday, that working out so far. We've scaled half of this position off, playing it via CURE, but still have half of this position on. Biotech, healthcare, these are names or sectors, areas of the market that had been consolidating and did break out and help lead this market higher this week. XLY also really continuing to explode to the upside here, up 2%, which is a pretty good week here for the discretionary ETF. You can see just there's a real parabolic sort of move here in XLY, and it's been consolidating. This one hadn't been leading like we saw some of the financials and energy and some of these other names really take the lead recently. We saw XLY suddenly emerge this week, coming back to these highs here. It's a tough chase. Wouldn't recommend it necessarily, but something to pay attention to as it had a nice surge this week. Also, financials really continuing their run, up 2% here. So you can see very much straight line rally continuing. Volume still strong, getting again even more extended away from some of those fast moving averages here. So financials, again, I can't say it's the it doesn't look to me like it would be the best idea to be chasing or adding new exposure here. If you have exposure, that's great. Continue to manage those trades accordingly. Mind your outstanding risk in those trades, but for new exposure, this is again a tough spot for me to get behind. On the flip side, where we had some digestion here after those straight line moves, was IYT. So IYT finished down on the week. It did try and push up above 180. That failed, reversed, and we're starting to kind of taper off and cool off a bit here. This, to me, completely healthy at this time. Really, there's looking for more of this type of action in some of these strong leadership sectors. Something like an IYT, I think, could come all the way down to 175 or so, or even further, and still be very much healthy and in an actionable sort of uptrend, particularly after kind of breaking out from these recent levels. So IYT cooling off a little bit. Check that next week to see if we see further pullback. Pay attention to it if you want to get involved in it. I think XLE is also a place you can pay attention to. This had this very sharp kind of move off of these lows, breaking and bucking this downtrend channel that it's been in for quite a while. And you can see now it's starting to move sideways here. Isn't maybe pulling back tremendously at this point, but this might just be a consolidation through time. So if you want exposure to the energy sector, this is a consolidation that you want to pay attention to. Maybe it just bounces around in here, it doesn't give much back, and then it starts a new leg higher later this month. So something to consider if you're looking at XLE and this recent breakout is something you want to be involved in. I'd pay attention to some of these developments here throughout this week. So I think that's it. That's all I had to cover. I think there are a few other... Actually, let's take a look at utilities real quick. Yeah, so still kind of just slogging it out down here. It stopped this waterfall lower, and you can see it's just kind of meandering here in between some of these fast-moving averages, which are trying to flatten out. I think that's constructive in the short term. Staples, we talked about this candle, this session right here on Wednesday, this nice kind of potential reversal candle. We got some follow through, and then it gave a good amount of that back here on Friday. The volume was pretty low on Friday. You can see we're back to these lows on very light volume, whereas we had some nice turnaround volume here on strong volume. I think I boggled that sentence, but I think you know what I mean. So something to pay attention to. Maybe this is carving out some type of of a bottom here, but still maybe a bit messy, but something to pay attention to on the defensive side of the market. So hopefully you guys had a good week trading. Hopefully this video helped. Thanks so much for watching. If you like these videos, do subscribe to our YouTube channel. Bottom right hand corner keeps you up to date with all of the latest that we put out there. And don't forget to subscribe to our newsletter. We have a newsletter that goes out every weekend, and just recently had some comments coming through saying, I listen to your YouTube videos all the time. I had no idea you had a newsletter, and we do. So if you're in that boat, check it out, traders.com/newsletter. Thanks again for watching. Have a good weekend, and talk to you guys again soon.